This is obviously illegal, and you would go to jail for that today. My name is Felix. I got into banking about 20 years ago, landing a job on the trading floor of an investment bank at what we called the hedge fund strategy desk. For the last 10 years or so, I've been trading my own money, and I've built out a team of people that includes about a handful of former hedge fund managers and market makers. I love good films, so I'm super excited to be a movie critic here today and run through my favorite lists of trading Wall Street movies.
It'll stabilize.
I know it will. So, I've been thinking, I've got a new game plan for the call. Can you try not look so nervous? I know what I'm doing.
I'm relaxed. I just think it's a little late, considering the gravity and the need to get the relationship right.
Sure. The new strategy is really just a refinement of all this great work. It goes, well, the working title is Go F Yourself.
I don't have a meeting with his lenders, and he's borrowed money from them, and he's used the shares in his company as collateral. And that's something that every billionaire does out there to this day. Elon Musk, how does he get paid? He doesn't get paid. He pledges shares he has in, say, Tesla to a bank and then gets $20 billion or $40 billion or whatever. So what happens if the price of, say, Tesla were to dramatically collapse? The bank would have the right to take over those shares, unless you can make up the difference. So he is proposing to start that negotiation with F off. Probably not the wisest of ideas, and probably not very realistic unless you're a completely cocky idiot.
You know, what I'd like to know is what your position will be if we have a sustained breach of the stock price and we fall out of compliance with our debt covenant.
Okay, well...
So debt covenant is essentially a fancy way of saying there is a clause in the agreement that says if we drop below $100, you got to repay immediately at the option of the lender. So the lender can just say, I want all my money back. I want the whole 3.25 billion back. And you might not have the money then. So in reality, most banks will probably come to some sort of negotiation and settle with you and give you a little bit more time, or they might bring other banks on board. That's probably what they want to do because they want to spread the risk out. So they say, okay, you owe us 3.25 billion. We're going to split this across 5 lenders. We're all going to take a bit of that, and then we're going to maybe up the interest rate or some sort of fee for this arrangement to be extended.
So what will we do here in reality?
If it breaches 130, you've broken the covenant and we will want repayment.
Is that realistic? It's realistic if the bank no longer wants to deal with you and never ever wants to deal with you again. Because if you're a major company and you borrowed 3.2 billion from a bank, typically they want to do business with you. So unless they think you're going out of business tomorrow, or they just really hate your guts, which is usually doesn't usually come into it that much, they would very likely come to some sort of agreement. So the fact that they aren't here really means the relationship is really screwed.
Like, really?
Seriously?
Okay, I get it. That's your initial position, but we will want to restructure and...
Look, here's where I'm at. We're not crazy about the media sector. We're not crazy about how your father has treated our relationship, and our position is to seek recruitment.
Oh, come on, man. F*** off.
That's a pretty awkward silence. Do those things happen? Yeah. I was a junior lawyer for a little while, and I was in M&A negotiations 4 a.m, where 2 parties that didn't particularly like each other had to come to a deal. So what do you do in that moment? Well, you typically separate them into different rooms, and you have lawyers going back and forth, because then the F-bomb doesn't get dropped, right? Because you know that there are characters that don't really get on very well. So to have that one-on-one conversation without lawyers present, does that happen? Yeah, it does. I've been on deals where I've seen the guy in charge, whose company it was, pick up the phone and call the bank and scream and shout at them and threaten, if you don't put this thing through in the next 15 minutes, we're pulling all of our business. And that does work, surprisingly, with pretty large banks. But is it the smart thing to do if you've got the leverage? Yeah. But this guy drops the F-bomb here, Kendall. He doesn't have any leverage, right? He's the beggar. So if you come begging, you better come offering something.
I knew exactly what I needed to do. It wasn't writing.
Oh, I love this.
It wasn't books. It was much bigger than that. But it would take money to get there. Armed with Vern's last $800, I made $2,000 in a day. Next day, $7,500. It was too slow. I need more capital. But banks weren't lending to guys like me.
It's still true that if you're a small-time trader, no one's going to lend you any money. Brokerages now might give you a little bit of margin, but not a great deal. So that's kind of where all these funded trading outlets have stepped in.
My new friend, Kevin Doyle, showed me how you could leverage 2.5 times your cash at a day trading firm. I've been upping the dose for over a week.
Okay, that part is probably realistic. You could find some day trading outlet nowadays still where you show up with 100K and they say, hey, we'll give you some leverage. If you can show some track record, kind of what I was talking about. Yeah, I think that's probably realistic. Now, the drug taking thing to make you into a better trader. So in my day, people were taking cocaine mostly. Some people then started taking Adderall, and a lot of people would end the day just with copious amounts of alcohol. And why? Well, apparently the cocaine makes you more energetic, think faster, that sort of thing. Never taken this stuff myself, so I can't really comment on it. And then the alcohol, I guess, was needed to like calm you down again at the end of the day. The Adderall is a similar thing. I think it was meant to, again, be some sort of performance enhancer. People are even giving it to school children. I think this story here with him popping these pills is actually based on real life. It is actually based on what's going on, or was going on certainly at the time, in banks and trading floors, but probably not to the extent yet.
I was jacked in, booted up. At the end of the week, my brokerage account contained over $2 million. Word quickly got out. And finally, Kevin Doyle trying to sound casual.
Eddie, I was talking you up to my boss, and, well, the impossible happened, bud. We got you a meeting with Carl Van Loon.
This is pretty realistic. There are these sort of superstars who just have smarter brains, who think faster and have generally no emotions and are therefore very, very good risk managers, who just come out and they become superstar traders. And those people are hunted down by the hedge funds usually, who throw money at them and big sign-on bonuses and so on.
Exxon at 86 and a quarter 6 months ago. Today it is trading at 36 and a half. Mr.
They called it Black Monday. No shit. By 4 p.m., the market had dropped 508 points. The biggest plummet since the crash of '29.
All of these people knew that they were basically losing their jobs. And the same thing happened, global financial crisis, all those guys sitting at Lehman's and at Bear Stearns and so on, they knew that this was the end. And they also knew when they were about to get fired, there'd be tens of thousands of other people getting fired at the same time, and they wouldn't be able to waltz into another job. I know a lot of people who graduated just after the dot-com bubble, for example, burst, and they were all hoping to go and work for investment banks and brokerages and consultants and so on. And they couldn't get jobs because 30,000 people or 80,000 people, however many it was, just got laid off.
Something just came across my desk, John. It is perhaps the best thing I've seen in the last 6 months. If you have 60 seconds, I'd like to share the idea with you. You got a minute? Name of the company, Aerotine International. It is a cutting-edge, high-tech firm out of the Midwest.
I love that. Aerotine International, a shed somewhere in the Midwest. Does this still happen? You know what? You'd be surprised. I get pitched things all the time that I'm meant to promote on my social media. Companies that smell a little bit like Aerotine. And some of those will be good. Some of those will be great ideas, but 99% of them will not. And there are two parts to this. One, there is a sort of dodginess, obviously, to the sales pitch, which is very well done and scrupulous. And then there is the, well, small tech companies do need to raise money, otherwise they can't do what they do, which is why it's kind of allowed. This here obviously takes the biscuit.
John, one thing I can promise you, even in this market, is that I never ask my clients to judge me on my winners. I ask them to judge me on my losers because I have so few. And in the case of Aerotine, based on every technical factor out there, John, we are looking at a grand slam home run.
This is obviously illegal, and you would go to jail for that today. You'd have the feds crawling all over you. But the market, OTC is still around. It's actually a listed company. It's a pretty good company, actually. I quite like the stock. And they run the over-the-counter market, and there's actually stuff that's too small to really be like electronically traded in a major way by on the New York Stock Exchange or something. But there's still small companies that are looking for access to finance. And they're not all dodgy, they're not all scams like this little shed here. But this is where a lot of this nonsense was happening. And it was done exactly like that by direct sales, direct calls to people. And of course, a lot of this got shut down. A lot of this got closed down. A lot of these people went to jails.
GameStop, extraordinary volatility today. We might want to make this the stock of the day now that it's gaining 103%. That is volatility.
I will tell you, I've never seen anything like it. I'm concerned about it deeply.
I'm calling it the ultimate short squeeze. How much money is being made? Holy fucking shit.
So that chap there holding his temples is Keith, of course, the man behind the whole GameStop explosion and short squeeze. And really what happened there in a nutshell is that GameStop is a pretty average business that was selling computer games, and Wall Street hedge funds pummeled them by selling them short. And it meant they thought it's a crummy business, it's going to go out of business, we're going to make a lot of money as the stock price goes down. And for some reason, this chap here, Keith Gill, managed to unite retail traders through a Reddit channel to go against it and just buy the stock. And they bought the stock and they bought the stock and they bought the stock, and it just went absolutely ballistic. And what happens when you're short? As the thing goes up, you're losing money. You're losing more and more and more and more money. Your losses are actually unlimited. And this hedge fund chap there, who looks pretty concerned, who lost $1 billion yesterday or that day, he was clearly short. So the concern is you can sustain that till you hit your margin. Eventually, you're going to run out of money. You're going to run out of margin. You're going to get margin called, in which case the game's over.
True investors never heard of Reddit a few years ago, but for that to drive a short squeeze.
Funny thing with this is it's incredibly realistic. It's exactly what happened, is that it's usually the hedge funds that drive the short squeezes, right? They're kind of like, we're the masters of this game. We've got all the money. We've got all the insight. We play with you. Here, retail investors turned the game around.
You want to bet against the housing market, and you're worried we won't pay you.
Yes, that's
correct.
It shows the arrogance of institutions, doesn't it? Goldman Sachs here, one of the best, biggest investment bank out there, they can never imagine that they would go out of business, because if you work at Goldman Sachs, you've made it, right? You're in the Ivy League of banking. Of course, Lehman Brothers, Bear Stearns, to name a few, are no longer with us, and they thought the same thing. Because an asymmetric bet like this, where Burry here is saying, everyone's wrong, the housing market's going to collapse, he's going to get some insane return on that because it seems so unlikely. And the market doesn't price that risk incorrectly because the market doesn't think that's a possibility. So he can make a lot of money, and he knows if he does, the bank will probably go under because they will own or have underwritten or somehow be involved in agreements that are related to the housing market. So is this realistic? Well, it is actually exactly what happened.
I have prospectuses on 6 mortgage-backed securities all onshore.
So what he understood, which nobody seemed to get, is that these mortgage-backed securities are basically lots of mortgages packaged together. And the theory was, originally, you would have great borrowers, average borrowers, and some rubbish borrowers. And you packaged the whole thing together, and therefore you knew that only a very small percentage of borrowers would default because the high guys, rated AAA, they would definitely pay, and you just only have a few people in there who sort of a little bit on the edge. But what happened with these mortgage-backed securities before the global financial crisis is that they just took thousands or hundreds of thousands of people who could never afford the mortgage, and they lumped them all together. And then a rating agency came along and said, okay, if you've got one rubbish borrower that's rated fail, but if you've got 100,000 rubbish borrowers, we're going to give you a AAA rating. Now, how that logic made any sense is beyond me. It's fraud, right? That's really what that was. But that's what happened. And nobody really looked because you seen the size of that prospectus, right? It's a tedious document that's boring as heck. So in reality, nobody reads it. People just look at it and go, Goldman Sachs pays me X percentage a year. I trust those guys. It must be all right. But nobody does the due diligence and goes deeper, which is what Burry did here, which is what made him a lot of money.
Every battle is won before it's ever fought. Think about it. You're not as smart as I thought you were, buddy boy. You ever wonder why fund managers can't beat the S&P 500? Because they're sheep. And sheep get slaughtered.
It's true. 90% of fund managers underperform the market. And why? Because they are more worried about being worse than their competitor than they are incentivized to actually do a good job. Like, they don't get fired if they miss the market. So they do worse than the market. As long as everybody else does the same thing. Like, nobody moves their money, right? People just keep the money in the same mutual funds, actively managed ETFs, even when they underperform the market, because people don't know where else to put it. So there's this whole industry there that just caters to clients who haven't got a freaking idea and are scared that they would do worse than the sheep.
I've been in this business since '69. Most of these Harvard MBA types, they don't add up to dog shit. Give me guys that are poor, smart, and hungry, and no feelings. You win a few, you lose a few, but you keep on fighting.
And that actually summarizes up the brokers. Still, it's those people. It's the hungry ones, the ones who want to get somewhere, often from not particularly wealthy backgrounds. And the no emotions, the no feelings thing is probably the most important thing, because if you've got emotions and you're trading, you're going to lose money. So either you got to find a systemization that gets rid of your emotions and your risk management, or you just got to find people who basically don't have emotions to start with.
I am not just another broker, Mr. Gecko. If you give me another chance, I'll prove that to you. I'll go the extra yard. Just one more chance, Mr. Gecko. Please.
You want another chance?
F***ing A.
And you stop sending me information, and you start getting me some.
So I think that's really a reference to how do you get information? How do you get an edge, right? And hedge funds have sort of mastered that with, whether they're tracking the flight plans of CEOs to know who they're meeting, and whether there is a merger happening, which is legal in public, or, going through the rubbish of a company or a competitor. Is that legal? I don't know. There are a lot of things that goes on that is probably definitely in the gray zone. And I think that's really what he's referring to here. Does that still go on? Yeah, I bet it does.
Harpsichord, anything granular to watch?
Employment rate?
No shit.
What?
I've just spoken to Aubrey at Allerton. Why did you lie to me?
You're middle office. You shouldn't be calling clients.
You made a mistake. So what the f*** you think you're doing?
15 seconds to the print's gonna be soft, then we're clear.
Would this happen? Well, it sort of happened for like Leeson and people like that who kind of covered their tracks, making enormous mistakes and trying to fix them. In reality nowadays, no. Risk management wouldn't allow you to do this. Computers would pick this up. It wouldn't just be you and some charming Scottish chap trying to talk you out of it. So very, very unlikely this would happen. But the portrayal here, her stress, that's definitely real. I mean, she's obviously, smoking stuff to calm herself down and so on. And that's completely real. The drug use and the alcohol addiction, all that stuff, that's all true. But let's have a look at what does she do next? How does she actually fix this?
Harper!
Just wait. The announcement's coming in 5.
Big risk on the number. Plus 120 versus Street at plus 250.
What did I say? Told you.
This is something that new traders do all the time. They screw up. They hope for some magical thing, like in this case, non-farm payroll numbers to come in the way that they wanted to, and they hope that's going to fix it. Would that happen on a trading floor of a bank here or brokerage? No. You don't screw up and then have a 50-50 chance of fixing it. It doesn't, because it could make it worse. So you wouldn't do that. Risk management would shut you down. What she's doing next here seems to be, so she got lucky, but now rather than going back to zero and exiting, greed's kicked in and greed's taking over. And that's a completely normal emotional reaction. I teach traders how to handle that every single day. And again, is this something that would be allowed on a trading floor in a professional environment like this? I don't think so. But it's a great portrayal of what actually happens in our minds and how our emotions are programmed. We're risk averse, so we don't take the losses when we should. And we're greedy, so we don't take the profits when we should. That's kind of the starting point.
Ivor's buying dollars. It's fucking Ivor, man. Stored now, too.
First move's always wrong.
No, Eric, Ivor's lighting us up, mate.
Of course he is. He trades
Harper,
with
I am
me.
going to come over your hood and broadcast this if you do not execute at this level now.
It'll come back.
Punch it!
Wait.
I'm not messing around.
So what has she done? She's turned like minus 40,000 into plus 30,000 and now into minus 140,000 because there is apparently zero risk management at this firm. There are no stop losses, no trailing stop losses, nothing. So the realism here isn't really there. Like this would not be permitted, maybe in some unprofessional prop shop or something, but they'd be going out of business pretty quickly. Now, maybe her limit is just that low and they're trying to see what she can do, but she would still have rules. Like you're given rules if you're trading. You can't just gamble with $140,000 loss here unless you're a much bigger trader, which you probably isn't. Otherwise, you wouldn't be there.
All good?
Absolutely, of course.
Okay, that's gross. Again here, the thought that your mistakes only get caught out at the end of the trading day when sort of settlement happens, a little bit of truth to that, but risk systems are sophisticated enough now to pick up your loss. So I think you'd be getting a call, not just from that nice guy in risk management, but if that somehow breached your limits or something, then you'd be in trouble. You'd be in trouble. If you want to get our 3-step cheat sheet to becoming an amazing trader, download it at felixfriends.org/trading.